Good afternoon. My name is Romy Acosta. I am the head of investor relations of JOST Werke AG. And today I want to talk to you about our results for the first quarter of 2022. JOST made a very good start to the year 22. We posted a new record sales of 312 million euros, growing 21% revenues compared to prior year. And the growth came both from our transport business with 14% and our agricultural business with 46% compared to Q1 2022. Our adjusted EBIT margin remained robust at 11% despite the rising costs that we've seen overall. And that allows us to post a new record also for adjusted EBIT of 34 million euros in a quarter. This was possible thanks to our high operational flexibility, which remains a key success factor in volatile markets. And despite the low visibility to the supply chain constraints that we're seeing, especially with the war in Ukraine and the ongoing pandemic lockdowns in China, we have confirmed our positive guidance for the 2022 fiscal year and see ourselves well positioned to cope with what's to come this year. If we go a bit deeper into the results to see where the growth came from, and I say we probably should look at the right side of this slide to see the regions. I already mentioned the growth in ag and transport. We see that JOST grew in Europe by 16% or 25 million euros. Despite the truck markets being slightly affected already by the war and supply chain issues, the transport side did quite well. And we managed to grow also there in the European markets. Also in ag, we grew strongly in Europe. And North America was by far the strongest region. And you see here that compared to the Q1 2021, we managed to grow by 66%. There was a bit of FX tailwinds of 15% there, but still, even adjusted for FX, just managed to grow by 50% in that market, which also confirms that we continue to gain market shares in this region, especially on the transport side of the business. The only region where we didn't manage to post growth was in Asia Pacific, Africa. And that was due to the fact that if you remember the Q1 2021 in China was very inflated due to pre-buy effects due to Chinese regulation for trucks that came in place in June of 2021. So that the Chinese market, actually truck market, dropped in the first quarter of this year by over 40% compared to the prior year. And we as JOST actually did much better than the market in the region due to growth driven by the Indian market, the South African market, as well as Southeast Asia and the Pacific region. So overall reaching these 312 million euros I mentioned before. If we look down to the bottom side on how EBIT developed, we see also that we managed to grow in Europe by 1 million and our adjusted EBIT margin was 9.7%. That was down from the prior year where we had a margin of 10.6%, mostly due to the fact that in Europe bears the headquarter cost for JOST, so costs are a bit less flexible than in other markets in the region. And also there too, we saw the impact of inflation, especially on the energy side, but also other costs hitting a bit stronger than in the other regions. The North American market also grew quite strong. Adjusted EBIT margin was 8.6%, up from the 7.5% of the prior year. We almost doubled our adjusted EBIT in the region. And also in the Asia Pacific, Africa market, despite the contraction we saw on the revenues, EBIT, of course, went down, trailing revenues by 1 million compared to the prior year, but the margin improved to 18.2% from 17.5%. And this was also due to the fact that actually the other countries in the Asia Pacific Africa region have a higher margin than the Chinese market does because they tend to have a higher proportion of off-road applications on the transport side of the products that we sell. So it's a bit of a better product mix overall due to the contraction in the Chinese market. And that allowed us to post for the group the 11.0% adjusted EBIT margin in Q1 and reaching this new record for a quarter of 34 million that I mentioned before. And that led us to confirming our guidance for 2022. We expect that despite the uncertainties and the low visibility that we are being confronted with, we believe that we'll be able to grow both sales and adjusted EBIT by a mid-single-digit percentage range compared to 2021, reaching a stable EBIT margin also compared to prior year despite rising costs. And CapEx should remain in line with the 2.5% of total sales. It's been the case for just over the past years, and we see ourselves well positioned to cope with the shifts in the margins and continue to grow and gain market shares in the different regions. Thank you for your attention. I hope I could keep you interested in our company. If you want to learn more, you can always reach out to Investor Relations or visit our webpage. Thank you.
Since you watched this company video until the end, I'm guessing you liked the video. That's probably because we work very hard to create the most engaging and value-added content possible for you. If you're a stock-listed company or corporation and want to find out how we at C11A can make a company video with and about you, please email us at community@c11a.com.